Arun Jaitley shoots down the Congress proposal on GST 2 days before Parliament reconvenes, refuses to include the standard rate as part of the constitutional amendment bill, says the architecture cannot be flawed.
I watched the show last night with Kiran, and you were saying on your show, I hope you're watching. I was. And of course, we take all of that input very seriously. Yes.
Minister of State for Finance JAYANT SINHA extends an open invitation to pharma companies to talk about the phasing out of R&D tax breaks. This even as the Finance Minister Arun Jaitley says that rent-seeking direct tax exemptions must be done away with.
And as we've said very clearly, is going to be launched by the end of the year. Everything that we're doing right now indicates that we'll be able to meet the deadline.
The National Infra Investment Fund will do what the top did in the United States to clean up balance sheets of PSU banks. That's what JAYANT SINHA told CNBC TV exclusively, as the transformation of the IDBI bank will be completed this fiscal.
Videocon connects with IIAS spectrum in Gujarat and UP West circles for over 3,300 crore rupees.
Geopolitical tensions mount in Europe. Turkey shoots down a Russian military jet near the Syrian border, claiming airspace was violated. Vladimir Putin refutes claims and calls Turkey accomplices of terrorists. European markets sink in trade.
The US economy grew at a healthy pace of 2.1% in the third quarter, shows the revised GDP data. But Wall Street wobbles thanks to geopolitical tensions and Fed rate hike fears.
Even after being termed a willful defaulter, a defiant Vijay Mallya chairs a shareholder meet of United Spirits, throws a hint at a possible retirement when he turns 60 next month.
Legal troubles continue to surround Maggi noodles. Government seeks to test samples for one last time before the Consumer Redressal Commission. Nestle opposes the move.
India and Singapore signed 10 bilateral agreements on the final day of Prime Minister Narendra Modi's visit, agrees to bolster ties in defence and cyber security.
Rains return to haunt Chennai. Schools shut for the 11th straight day. Met Department predicts more rainfall over the next 48 hours.
I also feel that there is a sense of insecurity, there is a sense of fear.
I'm surprised. The government and leaders and the supporters of the government need to ask, why are such things being said?
I was telling to come up with a remedy rather than leaving the country.
The only way this can end to this debate can come only from Mr. Narendra Modi making a strong statement.
The brand ambassador of Incredible India finds himself in the midst of an incredible controversy. The debate rages on whether what Amir Khan said was called for or uncalled for. Good evening and thanks for joining us in India Business Hour. I'm Nayantara Rai. Hi, Rana Joy.
Hi, Nayantara. And just when we thought that the intolerance debate was perhaps quietening down somewhat, there comes Amir Khan and makes a sort of, makes a statement. And clearly, once again, we see the fault lines within the film industry. Paresh Rawal now coming out and saying, he should.
And Anupam Kher. It is a divided one on whether he should, whether it was called for or not called for. I think that's a debate that is going to continue and beyond the duration of India Business Hour. So let's get straight down to the world of business. And we'll begin with our top story this evening, which will begin with the Lal Street. Tonight will be another range-bound session as markets consolidated for the second day running. The Nifty lost nearly 20 points. It's moved closer to the crucial level of 7,800. Sensex lost over 40 points. It's staying well below the 26,000 mark. Mid-caps, however, managed to buck the trend yet again. That index going home just about in the green. And near the top international story, Turkey has reportedly admitted to shooting down a Russian-made military jet on the Syrian border. Turkey claims the jet violated its airspace and was warned 10 times in 5 minutes before being brought down. But Russia will have none of it. In fact, Vladimir Putin has called Turkey accomplices of terrorists, as Russia insists the plane never left the Syrian airspace. This has heightened tensions in an already tense region. The US and Russia, do recall, have been conducting air raids in Syria. And it was just a few weeks back when a Russian jet and a US jet had a close shave mid-air.
The other big news point moving global markets, the third quarter GDP of the US has revised upwards to just above 2% versus the earlier projection of 1.5%. Something that clearly shows that, clearly the fact that there is some sort of recovery in the process, and that may also bring a smile on Janet Yellen's face, and that could well seal the possibility of a rate hike.
Ronald, it won't be this data as much as it's going to be the jobless data that is going to come out on the 4th of December. That is what is really going to seal the
big determinant. But this GDP high numbers is doing nothing to enthuse investors on the Wall Street so far. Geopolitical tension is of course one major worry, and a high growth rate means a healthy economy, and a healthy economy of course means that US Fed could hike rate as scheduled next month. And the fresh geopolitical tensions in Syria is hurting stock markets in Europe. All the major indices are clocking sharp losses as we speak. The Turkish lira has nosedived against the dollar soon after reports emerged the shooting down of the Russian warplane.
So let's see equity markets. Now let's talk about the commodity markets. After suffering a massive rout over the last few days, especially yesterday, commodities are slowly limping back to life and to their normal color. So you have base metals like copper, zinc and nickel staging some sort of a recovery after slumping to multi-year lows. Even precious metals like gold and silver clocking gains. In fact, we did see gold and silver back home in India open on a strong footing. On to crude now. Oil prices bouncing back with both the Brent and the NYMEX posting some healthy gains. So you have both of those also seeing a short rally as far as crude prices go. Now let's talk about policy. With less than 48 hours left for the winter session of Parliament to kick off, the Finance Minister Arun Jaitley has spoken out on the GST issue, saying the Congress Party's demand to include a GST rate in the Constitutional Amendment Bill cannot be accepted. Speaking at the ASSOCHAM AGM in Delhi, Arun Jaitley said such a clause would only lead to a flawed architecture, undermining the power of Parliament to decide on tax rates. Sapna Das, who was present at that ASSOCHAM event, now joins us live with the details. Sapna, you know, the Finance Minister not mincing his words with 48 hours left for the winter session of Parliament and sticking to his guns, saying that it would be an aberration to include a GST rate in the Constitutional Amendment Bill. That never in the history of any such Constitutional Amendment Bill has any tax rate ever been included.
That's right. In fact, this is a very clear signal from the centre that they would not be open to, a complete negotiation in terms of including the tax rates on GST into the Constitutional Amendment Bill. Not only that, even in terms of a dispute resolution mechanism, the kind of suggestions that have come across from the Congress Party that basically indicates against the current numerical formula. Wherein the collective vote is taken by 3/4 of the GST Council majority, 2/3 is with the centre, 1/3 is the states. The demand was to give 3/4 vote to the state governments. The centre, or rather, Finance Minister Arun Jaitley is very clear on this aspect also. He has almost shot it down by saying that the power of taxation still lies with the Parliament and not with state governments, or even with courts for that matter. So, they would not be in favour to giving 3/4 vote to the states for any kind of a dispute resolution mechanism. He has also added one more line on this front, saying that, to have a separate body headed by a former Supreme Court judge, that is also something that is not acceptable. So these are the two main contentious issues as far as the GST bill is concerned. The other element, which is a 1% tax, over here the government has not really made its mind clear. So in terms of a negotiation, if need be, the 1% tax can be done. Probably that is something that they'll be open to talk on. So that's the first thing. Second, also, he has almost virtually announced a kind of a roadmap for economic reforms, a recapitulation of the steps the government has taken so far, and what else can we expect. So in terms of the indirect taxes is GST. In terms of the direct taxes, here again he was very clear that some of the exemptions, direct tax exemptions which almost border on rent-seeking exemptions, they will have to go. Of course, he's open to meeting industry on this front. in terms of what further suggestions can be taken. Let's hear out the Finance Minister very quickly on what he had to say on the GST bill.
Where tariff rates are to be mentioned in the Constitution itself is a flawed architecture. And therefore the effort of any government, governments are elected for the people, or any parliament or any assembly, is to charge tax at a rate which is the bare minimum amount required.
This is something the Finance Minister has been reiterating time and yet again, that the GST rate cannot be enshrined in the Constitution, because every time you need to change that GST rate, you're going to have to go back to Parliament. And this is something a whole host of experts yesterday, right here on CNBC TV 18, had agreed with as well. And do recall, we did tell you that the GST rate is likely to be at 18%, if not lower. Now, even as the Finance Minister talks stuff, his deputy remains hopeful of the goods and services tax rollout on the 1st of April 2016. Speaking exclusively to Shireen Banja, and SINHA said the atmosphere for the GST is good. The government has been doing its homework since the monsoon session. Now, as far as the proposed phasing out of tax exemptions go, we've had a whole host of corporates talking about how they are hoping that at least that is going to be accompanied by a tax cut. We at CNBC TV 18 have exclusively reported earlier in the day there is no question of phasing out exemptions without a tax cut. Sources indicating that perhaps in budget 2016 you're likely to see a minimum 1% cut, and the ideal would be a 1.5% cut as the Central Exchequer moves to phasing out exemptions and cutting the corporate tax rate from 30% to 25%. Jayant Sinha also spoke to Shireen on this very issue and said he's open for talks with pharma industry. In fact, he invited the troubled auto industry and pharma industry to come and speak to the Finance Ministry, vowing that a simplified tax structure is going to benefit all stakeholders. Jayant Sinha also spoke about using the National Infra Investment Fund to tackle NPAs in state-run banks, adding the transformation of the IDBI bank is going to happen very much in this fiscal. Here's an excerpt of that conversation.
All of us want the economy to do well. We want tax rates that are reasonable, that are competitive, that are in line with global benchmarks. And so we are trying to ensure that we have a rate that keeps us competitive. We have a rate that will work for all of our business people and our consumers. So let's see what eventually transpires.
April 1, 2016, still feasible, you believe? If it goes through in the winter
session? I am an eternal optimist. I will continue to hope that will be possible. So let's see as and when the legislation gets passed here as far as the constitutional amendment is concerned. Then it has to go to 50% of the states, and then we have to pass the GST bill itself.
Right.
And that also has to be passed by the states. So the legislative calendar is very challenging. This is an invitation for Kiran and folks in the automotive industry to come and tell us what they think is the right way to do it. And that's precisely why we put this out. We signaled this in the budget. We've been talking about it for almost a year now. We've now put forward a roadmap. We hope that when all of this is taken into account, that there aren't any losers, that it's winners all the way. Right now, it seems to me that the pharma industry and the automotive industry feels like there'll be a loser in this. So we need to understand exactly where their pain points are, what their issues are, what can we do to make it work, because Kiran,
so you're open to that.
Kiran is exactly right. We are open to thoughtful and good suggestions at any point from anyone. We are always open. Asset quality is a matter of great concern to us and has been over the last year or so, and we've been working with the banks to really get a very good handle on asset quality, because Shireen, as you know well, what happens is that if you have certain sectors that are hit hard, we can go into a bit of a mini balance sheet recession. We've seen that in Japan, we've seen that in Europe, we've seen that in America. Now, America did a really good job of cleaning up its balance sheet with their TARP facility and so on, and really getting some of these assets off the balance sheet of the banks and really letting the economy move forward. Europe and Japan didn't do as good a job, and so they got mired into this balance sheet recession.
You were hoping to do this with the NIIAS.
Well, we are doing it with NIIAS. So we understand all of those lessons, and we have spoken extensively with experts, with our colleagues banks around the world in terms of how best to deal with this. We have NIF and other stressed asset funds that are stepping in. Kotak has just raised a stressed assets fund, and what we find is that business groups are increasingly willing to look at resolution where they can step down their equity holdings. Banks are willing to look at more reasonable capital structures, and with fresh equity coming in, we can take on some of these assets and turn them around. So all
when
of these.
When do you see the NIF doing what the task is?
Well, the NIF, we've said very clearly, is going to be launched by the end of the year. Everything that we're doing right now indicates that we'll be able to meet the deadline.
At least IDBI, the transformation for IDBI done in this financial year? You think that's going to be possible?
Yes, absolutely. All three of these, you asked for short-term executive action. These are short-term executive action.
Many takeaways from that big exclusive of the day. On to some news coming in from the deal street. Videocon sells its telecom business in UP, West and Gujarat to Idea Cellular for 3,310 crore rupees. The proceeds from the sale will be used by the company for paring down its debt and improving its financial metrics. CNBC TV 18's Prerna Barua managed to speak to the Videocon management. Listen in.
Done at a total valuation of 3,310 crores.
All right. So there were also speculations aloof that Videocon is likely to exit, in fact, in most of the circle barring Punjab, and this has been quite in the news reports. But are you also looking at any other?
You see, we have about 7 circles. Yes. Punjab circle is well-developed circle. It has got a huge valuation. So at the moment we are not selling. Right. Then 2 more circles, there are not many customers are there. 4 Indian customers, 2, 3 foreign customers are there. They want to buy. So at appropriate time, we will sell those also. And 2, Madhya Pradesh and Haryana, they are very good circles. Okay. And there we are having a lot of customers. Mr. Mali, you can say about that.
So MP and Haryana, these are the 2 circles where we have got a good customer base, and we will be launching 4G services there with spectrum sharing arrangement. And UP East and Bihar, these 2 circles, there are already discussions at very advanced stage, and very shortly you will hear that we will be announcing our deal done on that.
For those 2 sectors. So the deal valuation is roughly around 3,300 crore rupees.
3,310 crores. Okay. And whereas, you know, like our total telecom business, we are valuing around 14,000 crores. Yes, step by step, we'll be realizing that.
Videocon there exiting 2 circles. Moving on now, it's not often that a person who's been declared as a willful defaulter continues to occupy the chairman's post at a company. And yet Vijay Mallya seems to be unfazed with his new status. Addressing United Spirits shareholders at the AGM earlier today, the liquor baron, while evading some tough questions on his arrangement with Diageo, he said, however, that he's actively looking at working out a deal with the banks. Purnima Murli, who was at the AGM now, joins us with the details. Purnima, what are the key takeaways from that AGM?
Well, Ron, there are 2 important takeaways from today's USL AGM. Post the AGM, Vijay Mallya did speak to us on the sidelines, and while the state banks may have tagged him a willful defaulter, Vijay Mallya for the very first time has said that his focus right now is to settle Kingfisher Airlines dues with 17 banks. Remember, the defunct airline has a debt of over 7,000 crore rupees with a consortium of 17 banks, but he did not specify how and when the settlement would happen. When asked if he will retire from the USL board, remember the USL board had earlier this year asked Mallya to step down. In fact, on a lighter note, he said that he is turning 60 next month, and this is the age when people think of retirement. And when asked if he will consider retirement as an option, he said his priorities will change, perhaps an indication that he may retire come December. Back to you.
Thanks, Purnima, for joining us. With that, the biggest takeaway, of course, being that are we going to see a settlement with the banking consortium over the bad debt? The finance minister has also been talking about taking stern action against willful defaulters. And the king of good times, Vijay Mallya, looking for more good times in his 60s. Nestle may have relaunched the Maggi noodles, but the legal troubles are not going away. The class action suit filed by the government is being heard by the Apex Consumer Court, and Maggi could be in for a fresh round of testing. Ashmit Kumar now joining us with that story. Ashmit, help me understand this. So I in Delhi can go out and buy Maggi tonight, but it may be retested, 31 samples that too.
Well, the government continues to raise that question, the question that you raised, that you're eating Maggi, but is it safe enough? Not necessarily. That's the government's concern that they have put forth before the NCDRC, the Apex Consumer Forum. Now, what they're essentially arguing is that out of a sense of abundant caution to ensure that the lead content are within permissible levels, that's the reason that they're putting across, that they're pitching to NCDRC to continue with further tests as far as Maggi is concerned. The government also went on to argue that the NCDRC does have the jurisdiction to allow further tests. They also argued that they are acting out of a sense of public interest for the sake of public health. That's their contention that they're putting forth. This is a stance which, of course, is refuted quite fiercely at that by Nestle. Nestle arguing that there have been sufficient tests that have already been conducted, that a clean chit has been granted by various labs to Maggi noodles, that the Bombay High Court has settled this with a certain degree of finality. They also argued that Mysore Labs, the lab in Mysore, that was handpicked by the government, and that is a report that is awaited and that in fact is due shortly. So that should, as per Nestle, give a certain degree of finality, should suffice, and that no further tests should be required. That's, of course, Nestle's contention. Now, the NCDRC also voiced some concerns. They argued that this cannot be a never-ending exercise, in a word of warning to the government, arguing that they cannot come back consistently with more and more claims of further testing. And towards that end, the government at least has come out with a concession that if this prayer is granted of one final round of testing, that would be the end of it. The government will not seek any further testing after that. Towards that end, the NCDRC has directed the government to furnish a list of accredited labs, which they'll do, which the government will submit by tomorrow morning. And from there on, all eyes will be on NCDRC on whether or not they go ahead and allow a fresh round of testing. So clearly, the final chapter is still awaited. This is not the final word. NCDRC will be taking a call shortly. Back to you.
Thanks for that, Ashwin. In fact, we'll be coming back to you on that story. Moving on now, investors advisory firm IIAS fired a fresh salvo against car maker Maruti's proposed holding company structure for its new Gujarat plant and sparked off yet another war of words with the company. CNBC TV 18's Farah Bukwala Vora takes stock of the latest scrimmage.
Car maker Maruti Suzuki has spent considerable time and energy trying to convince its minority investors to go along with the proposed holding company structure for the new Gujarat plant. But it has been unable to cut ice with proxy advisory firm Institutional Investor Advisory Services, or IIAS. In an open letter, IIAS has advised Maruti's minority shareholders to oppose making Suzuki Corporation the owner of the Gujarat plant. What's telling is that this letter comes even as the crucial postal ballot to decide on this proposal is underway. In its strongly worded open letter, IIAS argues that allowing Suzuki to own the Gujarat plant will shift the balance of power in Suzuki's favor, that the move will see Maruti losing all control over its own destiny, and that Maruti's shareholders will always remain subservient to the interest of Suzuki shareholders. The letter also calls on Maruti's minority shareholders to decide whether Maruti will continue to remain a manufacturer of cars or become a glorified distributor. Maruti has been quick to respond to the letter with an equally sharp-worded rebuttal. Maruti says IIAS has not explained what it means by saying shifting of balance of power to Suzuki, nor does it go into the financial implications of such a situation. It has also refuted IIAS's claims that Maruti's board was cowering down to Suzuki. It says the board, under law, has full power to take all decisions, and neither the board's position nor that of Maruti's shareholders would change because of the funding arrangement for Gujarat. Further, Maruti also points out, and I quote, "This arrangement will bring 8,000 to 10,000 crore rupees of FDI into India at zero cost to Maruti. Maruti will have full control over what happens in Gujarat, and all the profits from the Gujarat production will come to Maruti. In addition, Maruti will earn treasury income from the money not invested in Gujarat." End quote. Just how investors read the situation will become clear after the 15th of December when voting ends. And while IIAS has been opposing the proposal, institutional advisory firm SES has gone on record supporting it. And many mutual funds are yet to take a final call on where they stand on the proposal. In Mumbai, Farah Bukwala Vora.
India and Singapore have signed 10 bilateral agreements, including a joint declaration on strategic partnership and pacts for enhanced cooperations in various sectors, be it defense, cybersecurity and civil aviation, just to name a few. Prime Minister Narendra Modi did meet his Singaporean counterpart and is now on his way back to India. Kritika Saxena caught up with a whole host of investors to find out their plans as far as FDI inflows into India go. Here's a report.
The laws, the regulations, the clarity, contract law, dispute resolution, all that is still a big quagmire in many ways for international investors. Most importantly, if certain things like GST, which we think are critical, which will help structural inflation, improve efficiency, and also if things are done to protect investors a little bit more from difficult situations in India, I think there is no reason why we will not double that amount in the next 5 years.
For us at DBS, we are playing our strategy fundamentally down that path. We think India has a lot of opportunity. And in the next few years, we're actually putting substantially more investment into India. If we get our regulatory approvals, we will subsidize, we will launch a more digital retail capability. And the reason we're choosing India to do all of these is we think the time is right, and we think that the overall infrastructure that has been created is very positive. The subsidy license will really allow us to build out an SME franchise. And then we will couple that with a digital agenda to build out a retail franchise.
Well, now on to our special series inside Hyderabad. The city has been known for churning on entrepreneurs, and with Hyderabad now in line for smart city startups, things are only looking up. CNBC TV 18's Deepti Bhattini and Arundhati Ramanan brings us this report.
Hyderabad. Its wealth of heritage and history dates back to when it was established in 1591 by Muhammad Quli Qutub Shah. But it's over the last 30 years that Hyderabad has emerged as a strong economic hub. It began in the 1990s when Hyderabad saw a steep rise in migrant population. Today, Hyderabad is home to nearly 21 IT SEZs and 300 IT companies, including giants like Microsoft, Google, Facebook, Amazon and Flipkart. These companies provide direct employment to nearly 350,000 software professionals and indirectly sustain over 10 lakh families. Now, despite all this, Hyderabad has not managed to gain metro status, but a different laurel may be within reach. The city is one of 99 selected to be transformed into a smart city.
To that effect, we've already started our project. We've already started discussions with several technology providers. But again, the key factor to making a smart city, a livable city, is Indianize most of these solutions.
In this regard, Hyderabad has a lot going for it. It's flush with multinational companies, SMEs and startups are exploding onto the commercial landscape, and it has the educational institutions needed to satisfy skill requirements. So the state has only one big hurdle to clear.
We have the raw material. The pieces are all existing. Now we need to, through policy, we need to connect these pieces that are lying, in different parts. We need to really bring them together, ensure that all of them move in sync.
The race is on. Authorities in Hyderabad have already begun working on various facets of urban management and development that will keep it in the race to receive 100 crore rupees a year from the central government for the next 5 years. Both Telangana state officials and experts are confident that smart city status will only make the city more attractive for investors. However, this exercise will gain momentum only if the state is able to synergistically integrate available resources with inclusive policies. With Deepti Bhattini in Hyderabad, in Mumbai, Arundhati Ramanan.